All right, so we'll just jump right into this then. As most people are able to look at and see it. If you're not or are unavailable to hear what's going on, I apologize for that. We'll send this out in video form afterwards, and we'll make sure we get everyone a copy. So thanks again for joining us today for this webinar from WHVP. We're going to be talking about the accessibility of the Swiss Wealth Management for Americans. A quick coverage over WHVP, or Weber Hartmann Freyhofen Partners, where we work. We're located in Switzerland and have been working with U.S. clients since 1991. We just celebrated our 31st anniversary. We're really excited to also in their 30th year go through a succession planning. We've now moved from first generation founder to our next generation of management, and we're really excited about the future and what it has to hold for us. A quick background on me, Jess Roberson, what I do, I assist our managing partners in administrative tasks around the office and throughout the day. I also support our marketing efforts and research investment. So we will move on to the next slide. So what we're going to cover in our content today here, we're going to talk about what it's like working with an independent asset manager and what that means. We're going to talk about offshore investing and how that benefits Americans in moving investments offshores. We're going to talk a little bit about Switzerland as a jurisdiction, and finally what it's like to work with WHVP. So to start off, we're going to talk about what's it like working with an independent asset manager. An independent asset manager can be a confusing term. So first, it's an independent partner. Sometimes when you go and work with an asset manager in a bank, they have structured products that they're selling, or different products that they themselves produce, and an independent asset manager is not connected to any banks or products. They work independently and don't have kind of the outside push of selling certain products to the company. Then you have a personal service, a personalized service that's very much tailored to the client. And being an independent asset manager, you can really focus on each individual client and figuring out who they are, building a relationship, getting to know them, and making sure their experience is personalized to them. When you work with WHVP, something we really, really enjoy is that our clients have a direct access to our ownership. What we find is very important about this here is when there's issues or clients have questions or concerns, our hierarchy at WHVP is very direct. So the bosses and our managers are all hearing the questions, hearing the concerns, and it helps resolve things much quicker. Then we talk about continuity. So at WHVP, we really have an incredibly low turnover rate in employees, especially in relationship managers. And that means when you get your relationship manager, you decide to work with us, we decide to work with you, you're going to really build a relationship with your asset advisor and your throughout your investment process. Then we have a focused specialization on investments outside of the US dollar. These are direct investments for the most part, and we make sure that your portfolio is not exposed to the US dollar at all. Also working with us, you get a choice of a custodian bank, so you don't actually hold your funds with us, but you have a custodian bank that we work with. We'll get into that later of how that works, and we work with you to manage your assets here and or offshore. A huge benefit to working with us is lower minimum size, meaning you're able to enter a market that maybe you might not be able to enter based off of your net worth, or you have a lower minimum investment to move into the market. And that allows us to work with you and provide services to a wider range of clients. And then in working with us, a huge benefit is the broad network of our partners. And this is a network that we've worked really hard to build over time and bring to our clients' fingertips. And this is lawyers, asset protection, lawyers, trust firms, and CPAs that we can give access to our clients. So moving on, what does the setup look like when you decide to work with an independent asset manager like WHVP? First off, the client is at the pinnacle of what we do at WHVP. And we use a limited power of attorney with a setup with the client to help or to manage the investments. And we then have a contractual agreement with the Custodian Bank that we bring clients to them, and we manage the client's finances through the Custodian Bank. This allows the client to have the bank account with a top private bank and only have to speak with us and allow us to use our experience and our expertise to get better fees and deal with problems in a more efficient manner due to our experience there. So we'll move on to what are the benefits of an offshore bank account. First is the geographical diversification. Diversification is a huge topic in asset management, and this is a principle of what we like to say, it is not keeping all of your eggs in one basket. Meaning, if you're a U.S. person, a lot of your assets are most likely held in the U.S., exposed to the U.S. economy, the U.S. stock market, and the U.S. dollar. When you move offshore, you're able to diversify that and have little eggs in a different jurisdiction, in a different place, that are not exposed to the same threats or risks that they might be exposed to in a domestic environment of where you're at. Then a different portfolio emphasis allows you to work with us and create a portfolio that helps to complement all of your other investments. And it focuses on stabilizing your overall wealth portfolio and building that generational wealth for years to come. Then we want to talk about an added layer of asset protection. This is important in the sense of frivolous lawsuits. Chasing down funds in another country is much more difficult. It's time consuming. There's legal processes that need to be gone through, and it discourages frivolous lawsuits to go after your funds in foreign countries. A note here is that if there is a legitimate case against you in the U.S. and the court has ruled against you in Switzerland, Switzerland always upholds the U.S. ruling. So it's really a protection against frivolous lawsuits, but not criminal or civil. Enhanced privacy protection. So working with an offshore manager and having an offshore bank account is hugely beneficial due to the high standards of privacy and security. In Switzerland, for instance, there's the Banking Secrecy Act that it holds the banks and it holds the bankers to the same confidentiality standard of a lawyer or a doctor. So your information is private, it's kept safe, and all the I's and all the T's are dotted and crossed to make sure that your information stays private. And that's a really big point of the privacy and protection of working with an offshore asset manager and having that offshore bank account. Then there's the protection against the seeking domestic currency. Since the foundation of the Fed in the early 1900s, the U.S. dollar has lost its value by over 90%, and moving offshore into a different currency and different investments can minimize that risk of losing the value of your wealth in the long run. And then that overall enhanced stability. Often people have a bias towards the domestic market, and working in an offshore bank account with an offshore asset manager allows you to have people who are in the market and in the economies of something other than your own that they have experience on, and we can provide insight in that might not be able to be done by a domestic advisor. So there are some challenges to opening an offshore bank account, and we want to be transparent with those, but put them into a realistic perspective. First are the costs. It does cost a little bit more when you go into private banking and offshore bank accounts due to the privacy protection, and obviously making sure that the people, the clients, you guys can sleep safe at night or sleep secure at night, knowing that your assets are safe overseas where you are not physically at. These costs are not incredibly high, but usually compared to the US, there are fees involved, and it's not just the free bank account that you can get a toaster with in the States. Then there's the paperwork due to the SEC regulations and compliance issues of making sure that we're reporting to the authorities of the United States. There is quite a bit of paperwork that has to be done. However, we always walk our clients through this process, and we make sure that they understand everything that's going on, and we talk to them and explain each document to make sure that you guys know and that they know what they're doing, what they're signing, and that they understand everything. And I think the biggest point here to stress is it's 100% manageable. It's just not that 3-click and your bank account is open. And this is also a piece of that privacy issue. You know, there's some more steps to walk through to make sure that everything is in order and everything's correct. Then we have finding a competent partner. So finding those competent partners takes due diligence and looking into exactly who the asset manager is, what's their track record, what are the things that they have, do you like them, do they like you, are they a good fit? That always takes time, and that's okay. And it's good to take time, it's good to build relationships. That is one of our main focuses is building that relationship, but also informing people that they need to make sure they're doing their due diligence and looking for that competent partner. Then there's obviously the distance and time. We're separated by an ocean, Europe and the United States, and there's a time difference that makes communications a bit tougher. However, with technology throughout the past 30 years, this has gotten easier and easier, and we really make sure we work hard to make it as easy as possible for our clients to be in contact with us and stay connected. So we'll move on to Switzerland as a financial jurisdiction. Switzerland has a long history and track record of serving and taking care of people's wealth, dating back to the 19th century when the Swiss economy started managing and servicing the royals and the wealthy elites of Europe. They've carried on that tradition ever since. They have an exceptional education system. Professionalism and integrity is something that's pushed throughout those systems. Their education system is some of the top in the world, especially when it comes to the finances and law. Universities, there's the University of St. Gallen, and that's one of the top universities where economics students and law students go, and there's a real big push to be efficient and achieve the best out of yourself and the services that you're providing. Then there's the fact that Switzerland is just a wealthy nation. Their government takes care of their finances incredibly well. If you look at the past 2 years, going through the coronavirus pandemic, the national government only raised their debt to gross domestic product by 3%. They handled it very well, and their debt to gross domestic product is at about 43% at the moment. So they have low debt. They keep high reserves so that they can weather tough times, and this has been shown in how they've created a stable economic environment and navigated some really tough issues. Politically, they've remained neutral. They avoided both world wars. This is something that's well known. Maybe lesser well known, or some of you know that Switzerland is politically neutral, and they go on behalf of nations and intermediate so that people can have a better there's a resolution to it. This also provides a safe environment inside of the country that has less risk to being involved, or less political risk that might upset the economics of the country or the banks, or put any assets that are in Switzerland at risk. Now, then they have strict federal laws and regulations. Switzerland really, again, coming back to this Banking Secrecy Act, they are very tough and stringent on the financial entities that they are really taking care of the client. The laws are set up to protect the client and the client's portfolios and wealth and assets that are being held in Switzerland. Then they have a deposit protection scheme. This is similar to the FDIC in the US. And this, again, comes back to those strict laws, strict regulations, where they really want it set up to protect these people or investors' money inside of their country, and especially that of the Swiss franc. And that's where we see the Swiss franc as a safe haven currency. It's performed incredibly well in good economic times and bad economic times. So now we can introduce you to our services and what we offer at WHVP. We offer 3 services. One is a permanent portfolio. That's our kind of starting service, and that's a standardized, moderate portfolio. Then we have the asset management service, which is where we tailor make a portfolio for you that fits your needs and your desires and your overall wealth structure. And then finally, we have the concierge level service, and that's it's similar to the asset management, but it goes further and really takes on another level of building that connection between client and an advisor, of really putting in a bit more time. And you'll see what I mean on the next slide. And what I really want to stress here is all of our services, all 3 of these are available for personal accounts or joint accounts, should you be with your partner. And then we also do IRA accounts, trusts, LLCs, and foundations. So here's the overview of those services, and you guys can see what you get with those services and what kind of services are provided when you choose to go with one of those routes. So Pilatus, that's our permanent portfolio. That's that standardized moderate portfolio. The minimum investment there is $250,000. This is quite a good service if you're looking to dip your toes into offshore banking and offshore investing. Excuse me for that. And here you can see, what's big for us and what we really like to show is be clear on how much you're going to be paying in fees. So you see our management fees is 1%, and that personal relationship manager you get at all 3 of our service levels. And that's really something we stress. We stress that we build relationships with our clients to last for years and years. Then you see Eiger and Dom, they have the same management fees. The additional flat fee for that Dom, that obviously comes with some extra concierge service hours and a personal visit from someone from our team where we come and meet you where you're at. So we'll move on to the next. So what does that process look like? Should you be interested in working with WHVP? What would the process look like of opening an account with us and working with us? So that first step would be the introductory call or a video meeting over Zoom, where we sit down and we talk to you. We get to know you. You get to know us at a more formal level to find out who we are, if our services match you, if you match us, and really start to talk about what the future could be like. Then we go into deciding service, bank, and account type. What service that fits you. If you choose asset management or the concierge service. What custodian bank are you going to choose? Which one fits you? Where do you want your assets to be held? Then we have providing basic information about your background, finances, residency, and your passport copies. This is so that we can get some more information from you, so that when we go to the bank and we start to set that account process up, we have that information to already start pre-filling your forms out for you, so that when you get those forms, everything's straightforward. You can see everything that has been done, and your information is there, making that process a lot smoother for you. When that account is open and it's gone through processing and it's been through the compliance, then the bank account would be open. We would inform you that, hey, the bank account has been opened and it's ready to be funded. Once those funds come in, then we make sure that you know all along the process where that account, where the stage of the account is at. When it's open, we let you know. When the funds come in, we're making sure that you know right away, immediately, so that you can know what's happening with your assets. Then we set up a call to talk about the initial investments of what are the exact direct investments that we are going, or that you and your portfolio is going to hold. And then we go into ongoing communication. We are big on ongoing communication at WHVP. We want our clients to be up to date on everything with their assets and anything that's happening. We have a quarterly newsletter that we send out, as well as to our clients. We send out a report of how our investment team sees the markets, so that our clients understand what we're doing, the decisions we're making, and why we see the markets the way that we do. So then we can go into some of our custodian banks. These are our top three custodian banks. We work with multiple custodian banks that are not listed here. However, these are our most popular ones. They are located in Liechtenstein, which is a small country at the border of Switzerland and Austria. These are some really, really good family-owned private banks that really are competitive and safe, and they perform at an incredibly high level and provide a great service, and that's why we've decided to work with them. So what are our investments? What's our philosophy at WHVP? So our investments, we are conservative focused. We want to be long-term oriented with capital preservation strategies. This means that we are looking to build wealth sustainably over a long time. We want wealth to grow exponentially. However, we don't think you can time the market. We don't think that's a reality. We think you spend time in the market and let the market work for you and grow your money safely with reduced risk levels. This is why we exclude some of the U.S. investments, but in general, we exclude U.S. investments because we focus on we focus on the idea that the U.S. dollar is losing its value. Therefore, we don't have U.S. dollar investments in our accounts. We may hold some U.S. dollars on cash for transaction purposes, and the reference of your account will be in U.S. dollars. However, we're not going to be investing into equities or bonds that are in U.S. dollars. So these are direct investments. Direct investments are into stocks, bonds, precious metals, and foreign currencies. We don't go into funds. We don't invest in funds due to our exclusion of U.S. dollars and the tight regulation that the SEC has set on U.S. citizens investing in funds that are not registered with the SEC. So we don't include them in our portfolio. Then we have stock selection. So how do we decide on an investment? What do we look at? We kind of go from a top-down approach. So we look at the overall economy, what's going on. Then we look at the regional economies and what's happened in those regional economies. And then we highlight areas where we think there are potentials for growth in industries and in service sectors. Then we look for good, stable performing companies and what is their potential in those markets at the regional level, at the domestic level, and at the global level. And then we make our decisions based off of that. However, we always use metrics. So we use a variety of tools of metrics, judging how the company has done over the past history, what is their future outlook. We make sure we're in communication with the bank investing department so that we're in communication, knowing that we're up to date on the investments and the assets that have been placed in those investments are there. So again, this is, we don't do PFIX. This is the whole fund issue. We don't go into funds at all. So then tax considerations, where we have to state now we are not tax professionals. However, we have been working with U.S. citizens for 30 years, and we do take tax considerations into account. So U.S. tax reporting issues, we make sure that you have your tax statement at the end of the year of your gains and your losses. Again, we focus on that long-term time horizon. So in general, we're trying to go for long-term capital gains with our investments. Something that you guys need to be aware of, and that's where we go to the withholding tax. In Switzerland, there's a 35% withholding tax on dividends and returns of your stocks. However, this is reclaimed when that money is drawn back by the bank. So the bank reclaims it on your behalf. It's just a holding tax for the time being. Then we go to the Swiss turnover tax. This is a stamp duty tax for Swiss stocks or equities. I believe the tax is 0.0015, and for non-US or non-Swiss stocks, I believe it's 0.075. It's a little bit higher, lower for Swiss stocks. They encourage buying into Swiss stocks. And then again, going back to those investment considerations, we focus on that long-term capital preservation strategy so that you're not being penalized for multiple short-term investment wins that would be taxed at that normal income rate. However, if there's an advantageous situation, in some cases we do that. However, we focus on the long term. So I've come to the end of my presentation, and we would like to offer you a free ebook. This book was written by our managing partner, Jamie Freihoff de Rose. It's called Swiss Money Secrets. It covers history, politics, the government and how it's set up. It's Switzerland's economy as well as the banking industry, investing in the asset management industries, and what they look like in Switzerland, and how Americans kind of can relate to that, as well as it goes over taxes, legal entities, residency, and even citizenship issues or topics. It's a great book. I would encourage you to reach out to us by sending us an email, posted there at the top of the page. And if you're interested and you found this presentation interesting and you think you might want to work with us, or there's a potential for moving your assets offshore, again, write us an email so we can set up a Zoom meeting